Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video, we're going to be taking a quick look at a trade idea that I'm monitoring at the moment. Now, it is to do with the dollar yen exchange rate, because the dollar yen exchange rate has been mega on the move in the last couple of weeks. So let's jump straight into the charts and talk about what's been going on. Dollar yen has a very tight correlation to the differential between yields in the US and yields in Japan. Now, yields in Japan are pretty much anchored at zero because of the Bank of Japan's um, yield curve control policy. Uh, Meanwhile, yields in the US, just looking at them over here, they have been surging pretty much non-stop since August. Um, and they've been hitting fresh multi-year highs. Like, just to give you some levels, we've now got the US 10-year just around 4.15%. Now, at the end of August, this was just above 3%. So it's a big rally, and we've seen a big rally across the US curve. That's been exerting a lot of upwards pressure on dollar yen. Why have we been seeing this rally in both yields and dollar yen? Well, it's all to do with economic data in the US, inflation data staying much hotter than expected, labor market remaining very, very resilient according to the latest labor market reports for the last couple of months, all pointing towards the fact that the Fed's going to have to do even more to try and rein in inflationary pressures in the US next year. So we're pretty much now talking about US interest rates peaking around 5% next June, or around the middle of next year. That's what the Fed funds futures market is pricing, which is sort of quite a good gauge for expectations for the Fed's interest rate. So yeah, it's kind of no wonder that we've seen interest rates going so high in the US. But let's talk about the chart and talk a bit more technical. You can see here, dollar yen very much overbought now. It's been rising. I think that was 11 straight days of gains. And the RSI, the 14-day RSI, close to 80 now. That's well above the overbought level, which is, normally considered 70. The last time we got to this kind of level of overboughtness at the beginning of September, the rally petered out and we went sideways for a bit, and we even had a bit of a pullback. Now, that is exactly what I am looking for. Now, obviously, you've got to take your cue from yields. If they continue surging, then we could see dollar yen scorching past 150. But now we've touched that 150 level. I think there's a good chance that we could see some stabilization, perhaps a bit of a move sideways. Um, and I'm going to be looking to buy dips. Now, we've got this uptrend that we've been in. It's quite aggressive since August. You know, maybe we respect that. Maybe we continue to move higher, but that's not my favorite area of support, to be honest. So we can delete that. An area of support that I prefer is this previous high here from the 22nd of September at 146, which coincides quite nicely with the 21-day moving average. If we get any pullback to this kind of area for any reason in the next couple of days or the next couple of weeks, perhaps because we get more intervention from the Japanese government to try and stem this decline in the yen, then I will be liking that a lot. Because if we just look at the pattern that dollar yen has been in for most of the year, let's just zoom out, shrink this all down. You have these periods of surge, consolidation, but then the dip gets bought. You can see dip bought into, surge, consolidation, pullback, dip, bought into. Happened to a slightly lesser extent, last month, but still, it's the same old pattern. And, as long as we have the macro backdrop evolving as it has been this year, meaning Fed getting more and more hawkish, US inflation staying high, all this kind of stuff, Bank of Japan staying dovish, I see no reason why this trend can't continue. And if we go back on a monthly, you can see we've gone past that high from the 1990s. We're now talking about levels. Well, actually, this still isn't the 1990s, the very early 1990s. But we're now talking about 160 pretty much. Now we've broken that high there from 1998. So who knows, guys? If we start talking about the Fed taking interest rates to 6% as opposed to 5%, then I think there's a very, very good chance that we do eventually hit 160. So yeah, for that reason, I'm liking dips in dollar yen. So hope you enjoyed the video, guys. Hope it was informative, and I'll see you all in the next one.